Now, there is broad improvement, but conditions remain weak. That's the conclusion of the latest UK housing market survey in the May report by the Royal Institute of Chartered Surveyors. Well, most professionals say that prices are still falling, although the balance is narrowing. And it says there has been a modest pickup in homes coming to market. Let's now talk to the chief economist at RICS, Simon Rubinsohn. Simon, thank you so much for coming in. Something that surprised you? We were expecting actually the figure to be unchanged, and it does seem that, well, things are improving somewhat.
Well, I think it's from a very low base. Our indicators tend to be sort of forward-looking indicators, so we're probably trying to anticipate what's going to happen next. And we've seen in the last few weeks the Halifax and the nationwide numbers suggesting that prices are still edging downwards. I think that's consistent with the indicators that we've been producing for some months now. We still expect prices to slip a little bit further over the balance of this year, but not dramatically. That sort of area, yes, small rather than large falls.
And of course, this is for the whole of the UK.
It is for the whole of the UK.
What happens here in London?
London is bucking the trend. Even now, we're getting reports that prices are rising very clearly in London, and the outlook is even more positive. London stands out as being the area where price expectations are most positive.
And this is what, on the return of banker bonuses, on the return of money from abroad, and a cheaper, I guess, sterling?
It's a combination of factors. I think it is bank bonuses, the financial services sector in part. It's very definitely overseas investment, which has been a long-term story, continues to be a story, and every time we read more about turmoil in the Middle East or elsewhere, we think that the London market is going to attract more funds. But on top of that, I think the London economy, because it is more diversified than some other parts of the UK, it's able to sort of perhaps deal with the changes that are taking place, for example, the big cuts in public spending, which are going to have a more marked impact on some other parts of the UK.
So, Simon, in terms of what you're expecting for the future, it's this drop of around 2 to 3% overall, but a rise of how much for London prices?
London probably sort of a similar sort of increase in aggregate, so say 2 to 3%. But within that, obviously, London is many markets, and the sort of prime central is probably going to show rather stronger gains, again reflecting those very clear sort of drivers that we just referred to.
But overall, there's been no surprises. You're not concerned about the situation. You don't think that we're going to see a sharp fall or a slump. There's nothing that worries you more than it did previously.
I think at this stage, in terms of the major worry we have is a low level of activity, because the low level of activity across the UK, London included, obviously has ramifications for the wider economy, and arguably is more important for the wider economy. We saw obviously the BRC figures suggesting that sales picked up, having been weak in March. But